Is this the stock market crash that we've been all waiting for? I don't believe so. I think we're more of in correction territory because today, on Friday, the June 5th, we had companies like Micron going down by 13%, SanDisk going by 13%, companies like AMD down by 11%. And when I see numbers like this, especially for companies that have gone up so much so fast, to me, it's a healthy correction. And now, although I don't think it's going to be long for a long time, I really do like that there's some sort of rotation going on here. Because when you take a look at some of the non-technology companies here, some companies like Kimberly Clark, some of the companies that are more of a Dow Jones type of companies, they are actually being resilient right now. And I'm actually utilizing this time period in the stock market to buy more. To me, this is no concern to be fearful. Now, if there was one fear to be had, is all of these IPOs going live at a very short amount of time. We have the SpaceX IPO coming out at $1.7 trillion. We have Anthropic IPO coming out, and as well as OpenAI that is also expected to come out. And when you have all of these companies going IPO at the same time, it's definitely going to be taking out some of the liquidity out of the market. So your companies that have been doing so well, the Microns of the world, the SanDisk of the world, well, those you can expect there to be some profit taking. And not only that, a common theme that I'm starting to see is the need for capital from big tech companies. You see Google raising money of $80 billion. Now you might be wondering, Andy, what is that for? And it's mainly to go ahead and build out their data centers because it just costs so much. And the best way for them, at least in their decision making, is that they wanted to raise the money by selling some stock, by diluting the shareholders. Now, what's surprising about this is that when you take a look at Google stock, the stock price hasn't reacted so negatively compared to how we typically see when companies are diluting the shareholders. But it's not just Google. You take a look at Meta. Meta is also expected to sell some more stock so that it can go ahead and raise capital. And the big concern that at least I have in my eyes is that if all of these companies are starting to hoard some capital, if all these companies are starting to raise capital, then we're at a certain point, the cost of capital is going to go up. At a certain point, when you are trying to go ahead and raise money or borrow money, it's going to be expensive. That's why when I take a look at companies like the CoreWeaves of the world, the Nebius Group, I think I fell by 15% off of memory. That is crazy. And that type of movement is what is scaring the stock market right now, is because if cost of borrowing money goes higher, then all these companies, the quantum names, the names that just borrow a lot of money in general, they are going to be getting hurt big time. Now, for me, I've used it as a buying opportunity. I've ended up buying more Robinhood shares. Today, I bought 17 shares. And to me, this is, oh my goodness, it's like a blessing in disguise, you guys. Because when you have mass market sell-offs, to me, every single time these type of scenarios have happened, there are going to be companies out there that are getting sold off with no news coming out. And if you looked at the stock market today, there was no specific bad news that came out today. It's just more about the IPOs that's coming out, more about big tech companies trying to raise capital. Now, what I am the most excited for, you guys, is that when I am heavily buying the stock market during these massive sell-offs, the nice part is that the last 15 years, the people who have bought the dip, chances are they made a lot of money because we have raised a huge generation of investors who are just constantly buying the dip. I am one of them. Whenever we have a dip and there's no specific news to that specific company, bad news coming out, then great. I'm going to use that as a buying opportunity every single time because I am not invested for just 1 year. I'm invested for decades to come. So any buying opportunity, I'm happy to buy. Now, the other topic I did want to discuss about is this comparison between 1999 and 2026. And I think they are very different, you guys, because when I think about 1999, the big pop off that happened because of the tech bubble popping off, it's a little different in 2026 because Investors in 2026 have a lot more information compared to investors in 1999. And not only just information, it costs a lot of money to buy and sell out of companies back then. So there just wasn't as many retail investors back in 1999 as compared to today. Today, the average investor has access to so much information. I would say in throughout history, this is the year where an average investor has almost very similar scenario or very similar education level to the level of information access as a hedge fund, because with the access of AI, they can do so much of the research that hedge funds typically only had access to. Nowadays, an average investor can utilize AI at their fingerprints and go ahead and make similar buys and sells. So as a result, when I think about a 1999 happening where we get a huge sell off in the stock market, in 2026, most of those investors would have access to all that information. Lastly, the company I ended up buying today was Robinhood. I added an additional 17 shares of Robinhood into my account at $82 per share. And the reason I've started becoming way more bullish on Robinhood is that I still think this company is underpriced. When I take a look at the type of innovation they're having, and that the company has come down almost 50% from its all-time highs, yet it is still innovating, yet it is still continuing to grow their business. Their revenues are going higher. Now with the Trump accounts, which is a huge marketing tactic for them, and on top of that, you have agentic AI trading bots that's going to be coming out for retail investors to use. Those are all amazing news that I'm excited to see what's coming next for Robinhood. And now that we have the perpetual futures contracts, holy moly, more revenue streams for Robinhood to be had, and I'm all for it.